Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Michael Opp, who's the founder of Opp Financial, and we'll be discussing guaranteed investment income to meet an RMD strategy. Michael, welcome to the program.
Thank you, Mike. Glad to be here.
Hey, I'm glad to talk to you because I always love learning new things and picking up perspectives from people. And I think a lot of people, their ears perk up when they hear guaranteed investment income. So great. That's awesome. But before we dive into the topic, tell us a little bit about yourself and your story and how'd you get into financial services?
Yeah, Mike, I kind of, I grew up in the business. My father, he worked at Merrill Lynch. He was financial advisor. He became an investment banker. And so it really was something that I was exposed to on a daily basis, asking my dad, coming home from work, what's happening. And, the interesting thing is, my father, he retired at age 70, and 6 months later, he went back to work managing a bank. So, here's my dad who's 84, and he's still managing a large bank here. And so
Wow.
it just kind of in the blood, really. I mean, that's kind of how I started. And that was the interest. And then, of course, I got my training out of Prudential Securities, worked at Payne Weber, and really and about, that was back in the late 90s. And, great training program, but I realized that I wanted to go on an independent chassis, and I started Opp Financial back in 2004. So been, independent fiduciary since then.
Yeah, I think that is really, really important to keep in mind, and I know we want to dive into that at some point. Is let's define how critical being a fiduciary is and what being independent brings to the table, because I know there's some great power there. But let's jump into guaranteed investment income to meet an RMD strategy. Like I mentioned, everyone's ears perks up with guaranteed, and we know what income is. But define for us what an RMD strategy is, and then let's jump into how we tie guaranteed investment income into that.
Absolutely. So when you get to a certain age, 73. The government is going to force you to start taking required minimum distributions. And as such, there's a lot of people that say, I don't know what to do. Either they don't need the distribution, or they want to make sure, how do I make this RMD? How do I live on that without touching my principal? And I think, that's the big thing that most advisors might fall short on, is that you want, in the ideal world, and what my firm does is we want to make sure that you are living off your RMDs, but you're really not touching your principal. And I think that is the key to having really, longevity success with your retirement accounts.
Well, you said something that catches my attention, and I always like to approach these conversations through the lens of, like if I think it, many other people would too, because you said RMD, required minimum distribution, and oh well, what if I don't need it? So what if someone comes to that certain age and they have to take X number of dollars out for this required minimum distribution, and they go, I just don't need it this year because our expenses were low, or we sold a vehicle or whatever. We just don't need that, so we're not going to take it. That's a big problem, right?
Yeah, it is. I mean, again, you take a look at, gosh, what am I going to do with this money? I don't really need it. And so one of the things that we do is we do a comprehensive analysis of, okay, what are your options? What can you do with it? Look, you don't need that money. You're forced to take it out. Should you gift it, or is there a way that we can turn that into, because you have to pay the taxes, right? We know that you got to force it out, and that's going to be, last in, it's going to hit your highest tax bracket. So we want to make sure that we devise a strategy that maximizes tax efficiency. And fortunately, through our tax team that we have, we've come up with some great ways that we can mitigate that tax and or show you a way that we can turn that into a tax-free benefit or income down the road for you. So there's a lot of good planning that can be done to help those families that are, struggling with, gosh, I don't want that RMD and I got to pay the tax on it. Okay, let's figure out the options out there so that
Yeah.
we can turn it into a positive for you.
And if you know the gap of what you need to live on and what you have currently, and here's a gap or whatever those things might look like, then you're pulling out your RMD and then you've got some guaranteed income. And then to your point that you were making a minute ago, you want to hopefully accomplish that without delving too much into your main portfolio and maybe leaving the principal there. So let's talk a little bit about guaranteed income. Obviously, the word guaranteed is a nice, comforting word, but what is guaranteed income? And then obviously it's important to financial planning, but, give us some ideas of what some of those guaranteed income streams could be.
Yeah, absolutely. I mean, when we define guaranteed income, what we're talking about is something that is reoccurring, stable money that you can count on, right? It's like your paycheck, your social security, some sort of pension that you know is going to come every month. You look in your bank account, it's there. And I think but one of the challenges that retirees have is that their whole life they've been getting this dependable income, this paycheck, right? It's guaranteed income from your job, things like that. But then you get to retirement and that stops, right? You get a little Social Security. If you're lucky enough, you're going to get a pension. But what you don't, you have this pot of money, and this pot of money sitting in your 401k and your IRA. And you're like, gosh, now you're on your own. It's up to you to figure out, how do I take that money that has to be guaranteed, it has to be certain for the rest of your life, and turn it into a reoccurring stream of income for you, and
that you can count on.
Yeah, exactly. You got to count on. And so what we do is we say, okay, what are your needs? What are the things you absolutely have? How much do you need? And as soon as we can satisfy that through various different investments in the universe, then we know we've got that covered for you, right? Now you can sleep at night, because one of the biggest mistakes that an investor can make is that when they get to retirement and now they're going to need to live on that 401k, they got to live in that IRA, and they just leave it all to the variable whims of the market. Now you're hoping that the performance works for you. You're hoping that that money's stable. But what happens if you have a 2000, 2001, or 2002, or even a 2008, which was devastating, and you lose 30 to 50% of that portfolio? See, if you don't make that transition, then you're going to have some real problems in retirement. So having that guaranteed income strategy, which is, what we do, a comprehensive analysis, put that together. Hey, let's satisfy you there. Now you don't have to worry about, you can sleep at night, and hey, the rest of the money, you can grow whatever way you need.
So how is guaranteed income different than other kinds of income in a retirement plan? And I'm assuming that there's going to be an aspect of volatility and risk involved, where you go, hey, there's some kind of income streams, but it could be big, but it could be a lot of risk. So talk a little bit about how that differs than some of the traditional income streams that people typically think about.
Yeah, I think one of the big fallacies that we've seen in this industry is that people assume that they're satisfying their income strategy by buying a bond fund, right? They say, okay, hey, I got that covered, right? I've got half of my portfolio in bonds, and not bonds, but actually bond funds, because that's what most people invest in is mutual funds. And the problem is that with a bond fund, which people associate with income, is, guess what? You don't own the bonds. In fact, bond funds had one of their worst years in the last 39 years. And they lost on average 13-14% in 2022. And the traditional 60-40 funds, which people, most investors and advisors say, hey, this is traditionally where you want to be, guess what? That had its worst year in, I mean, on record, lost money. So you need to have something that is you actually have the investment vehicles that pay income, not within a fund, because when you have it within a fund, you don't own them. And if interest rates are going up, the value of those bonds drop. And guess what? The value of your fund goes down. And you also need to know what type of bonds you have there. Do you have high yield? Well, guess what? If we have high yield bonds, you know what high yield really means? Junk bonds. And if there is any sort of burp or, in the economy, if we have some sort of issues that occur, well, guess what? We have businesses go out of companies that go out of business, and those that you could have defaults on those, and the value of those junk bonds are very volatile, much more than treasuries, and you could see swings of even 30-40% drops on them. So you really got to make sure you know what you own if you're trying to create a guaranteed income strategy.
Mm-hmm. It reminds me of something that I know you've heard of because it's a cliche in the industry, but Warren Buffett is known for his 2 rules. Rule number 1 in investing, don't lose any money. And rule number 2, refer back to rule number 1.
That's right. That's right. I mean, I got to think
it's easy to say, and I know it's easy to say, but if you don't achieve that 100%, but you're shooting for that, you're going to get a lot closer than the traditional portfolio of volatility and risk and all that.
Absolutely. And I think one of the things that investors need to know out there is that, look, there's a difference of investment strategies from when you're in your 30s, your 40s, and your 50s versus when you're in your 60s or 70s, right? Because, the strategy you can have in your 30s and 40s, for our clients, well, they've got time on their side. They're able to ride out these economic storms. I mean, look, we've got, potentially a really bad mix coming called stagflation. And we haven't seen that since the Carter administration, where actually you have no growth or declining growth in the economy and interest rates going up. And that's a very tough environment for stocks to be in. But, if you're in your 30s, 40s, you can have the time on your side to ride it out. But if you are retired and you're depending on that money, see, that's where the transition has to come, because if you suffer a 20-30% loss in a portfolio, and trust me, Mike, I've seen it. I saw this for my retirees back in the early 2000s. That's life changing. I mean, that's game over. So having the proper strategy when you get into retirement and knowing where the pitfalls are, I tell you, that's essential to living out your retirement the way you want.
Yeah. Like a 30-40% drop on $1 million portfolio, $300,000 or $400,000 drop. That's a sock in the gut. So I think that's a huge aha for people. Can you think of a case study or an example of a client, without mentioning details or names, where you kind of put into place some guaranteed income strategies, and then, maybe the market dropped and they came back and said, "Oh my word, back in the day, this would have been horrible, but boy, I didn't even worry and didn't even lose a wink of sleep."
Yeah. And that's funny you say that, because I go back to the early 2000s when, the market dropped 3 straight years. And that was a real wake up call for me as an advisor that, wow, you have to really treat those retirees much differently than those clients who are younger, who have time on their side.
Mm-hmm.
And so the big takeaway that I came up after that is, I was going to ensure that, better get really good at RMD, retirement strategies, guaranteed income. And then when we left that market, I made sure that, I had a client who had suffered losses in the 2000, 2001, 2002 crash, kind of built it back up, but want to make sure that that was not going to happen again. Because we always know markets, look, we're only one terrorist attack or one economic crisis away from, a 30% drop coming. And so after we had secured their account and they were living comfortably on this guaranteed income strategy that was coming to them every single month, you know what came? The financial meltdown in 2008. And I remember getting a call from them, panicking. Is my money okay? Are we okay? I said, look, Tom, you're okay. Trust me, you're all right. Your money's safe. And not only did I get a call from, Tom at that time, but I got calls from several clients wanting to make sure that, hey, have we lost any money? Because there was a lot of panic. I mean, that was,
yeah,
we were headed towards a depression, truthfully, if the
100%.
Fed didn't step in. So that in itself, for those retirees and clients of mine that were getting that reoccurring stream of revenue every month, covering their bills, they didn't lose a penny. And I can't tell you, I mean, just how gratifying it was as a financial, planner.
Because isn't it true? The alternative of that is you've got your little canned spiel. Oh, it'll come back, and everyone's feeling the same. Whatever that all the other advisors that have money in the market
Yeah.
and risk and volatility, you've got your own little thing, and deep down you're going, I am so tired of saying this. So for you to be able to say we're good to go, the income's coming in, nothing's changed, your principal's not at risk, and we're fine. You can almost hear them exhale with relief.
Oh, yeah. I mean, the sigh of relief, the gratification that I had personally for, my job, which is here to help people, protect them, was such night and day from 2000 when you're talking to people in 2000, 2001, 2002, when it's despair and like, what am I going to do? Oh my gosh, do I have to go back to work? And so, I think what gets lost is, when I'd worked at, Prudential Securities, and I started there in the 90s, and some of my other wirehouse broker dealers, again, just what you said, Mike, that coin phrase, hey, buy low, sell high. Well, sure, that sounds great. Or it's time in the market, night timing the market. That does work when you are doing what? When you're dollar cost averaging in. And when you dollar cost average in, when you're still working in your working years.
And when you're in your 20s or 30s, not when you have less runway. Yeah,
that's right. Because when you're not putting money in and buying when the market drops, you get the opposite effect. You get what's called reverse dollar cost averaging, which actually means that when you're not buying there, you sell more of your investments, more units when the market drops. And it becomes this cannibalizing effect on people's 401ks and retirement accounts that they just don't have the time to recover from. It's called sequence of return risk. And we do a whole presentation to show our investors on what that looks like. So great question. The buy low, sell high, or time in, or write it out. Well, okay, it depends on the age and the risk horizon, but not forever.
Exactly. Well, Michael, it's been so great learning some of these strategies. Let's wrap up with any final pieces of advice or words of wisdom that you would give to listeners who are just starting to think about the concept of guaranteed income to protect their retirement.
Yeah, absolutely. I think what I would recommend to those listeners today that are making that transition is you're at a crossroads here, right? You're about to retire. You've got this pot of money. In all your life, you've been getting this guaranteed income that's, basically filled your lifestyle. It's paid for things. You have to replicate a strategy that is going to ensure that occurs with that pot of money that you're getting when you retire. Because that is going to make sure that that you live the lifestyle that you want to, that you have certainty in your life. And so start with getting a guaranteed income strategy that's going to cover your bills. It's going to cover the things that you need in your life. And then you can, do what you want with the rest. But give yourself that peace of mind and start, again, I would recommend if you're looking at this today, you want to look with work with a fiduciary who's going to look at all products, all aspects to make sure that you accomplish your lifestyle goals, your lifestyle needs.
100%. Well, Michael, it's been such a pleasure talking with you. If someone is interested in learning more and also reaching out and connecting with you, what's the best way that they can do that?
Yeah, absolutely. There's a couple ways that we can be reached. You have questions. You can visit our website at oppfinancial.com, and that's OPP financial.com. Schedule a time there, or you can call us direct at 720-989-4295, and we can have a brief conversation to see, hey, what would a guaranteed income strategy look like? How could we accomplish that? And what would that mean for you? And, we'll just have a little talk, see what your needs and goals are, and see how we could help you out there.
Excellent. Well, Michael, thank you so much for coming on. It's been a real pleasure talking with you today.
My pleasure, Mike. Enjoyed it.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.